detail that we can go into with this. Um,
Chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you.
Good morning, everyone. Let me know if you could hear me all right. Hopefully y'all can hear me. Good morning, Fotis, my brother. What's up? Should be a pretty good day today. We should have a pretty good time. Hopefully you guys had a good weekend. is a pretty ridiculous lag. I'm not sure why. Let me see how long it is. Yeah, I think it's like a 10-second lag. Damn it. It says the bit rate is not good. You guys can see me okay, right? You said loud and clear, you could hear me. What about the visual? Is the visual okay? Just let me know if the visual's alright. Everything's fine, alright. Alright, well, keep in mind the lag. Regardless, we should be able to do what we always do, right? So, yeah, we'll see. Let's go check the news. Alright, so we have a very, 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 very busy morning. So we will see what kind of stuff takes place. One thing you want to keep in mind, when price is parabolic, and it's just ripping people's face off, one-sided, in this case to all-time highs, there may be a high forming at some point in the near future. So you want to make sure that you're not going too crazy. You don't want to pick a top. Okay, so I would say that if price, let's move around a little bit. I would say that if we get beyond the 4-hour fair value gap, say it breaks down, depending on how it reacts from that, right? If it leaves it open, or if it it just fills it and then aggressively reprices higher, DXY obviously is still dropping. That weekly bearish order block we talked about on Sunday, and then I talked about it yesterday in my private group. If that's gonna hold, again, the higher time frame on the DXY, nothing tells us that we're going to be bullish yet. So what does that mean for those of you that have been here for a while, right? Or even those of you that are new. If the higher time frame has not broken structure, if it hasn't done anything that leads us to believe that things are going to change, we're going to stick to the direction we're going in, even in the face of something like this, right? It's the same thing that we did on this monthly chart with this large movement to the buy side. We held on to the bearish narrative, and then of course that was profitable, right? In learning, or if we were to engage the DXY, it was definitely good for the indices, right? We've been pushing price higher, right? We haven't really favored anything to the downside just yet. That may change very soon. When price is parabolic, what goes up must come down. Okay, so doesn't mean you pick a top, right? Doesn't mean that you get reckless and try to short just because that's possibly going to happen. We have to wait, right? And like I said, we have this 4-hour fair value gap. I'm very interested in watching how it behaves. So let's actually put the box there. with price being so aggressive so early in the week, I mean, it's only Tuesday right now, right? So with price being so quick to move in one particular direction, you know, you guys have seen, if you've been here for, you know, any amount of time, you guys have seen that the faster price moves early on, the more aggressive it is when it turns around, if it does look to turn around. You know, we've ran up. What has that done? That's fed into the euphoria, the FOMO of, you know, people that are trying to get involved to the buy side, or maybe they were too scared because they're trying to pick a top. So, you know, we're going to have to keep that in mind, right? And so we're going to have to watch this. We've got the open price here. It basically priced in a low, at least for now. And then basically it rallied up, right? We've got the wick in here. Look at the 50%. Price held the 50%. This down wick did the, you know, basically the same thing. And then now price has moved higher. I can say that if this is what it looks like, and we were to get down below this low, that becomes a breaker. This would become a high that could be reasonably trusted to then drag us down into something like this. Okay, so my eyes are here, and they're also at the, obviously the all-time highs continuing, right? Unless this is broken. And depending on how it treats that, that would determine whether we're going to try to target, you know, sell side. Before obviously price gets down to here, we still got to break through a lot of this, right? If we go to the daily chart, we have previous day's low here. We have another previous day's low here from Friday, right? If it does break down and supports this idea, we're going to think potential bearish power 3. This could be the high of the week. Maybe they punch one more time up here before that happens, if it does take place. That's not the main objective until this gets violated and then potentially respected and used as an inversion. And then we completely change our opinion, at least for the short term, if this low is broken. And then we start seeking some of the sell stops where traders have rushed their stop, right? Something interesting. You could see this trend line. So much for trend lines breaking, turning to resistance, and then continuing. That was just, you know, totally used against them, right? Oh, faked you out, set equal lows, probably for later, and then continued to rally because structurally nothing changed. The wicks broke down below this fair value gap. Did it close below it? No. So what did it do? It wicked lower, swept these people out, took their stops, and then rallied up aggressively. This high to that low, right? We talked about this on Sunday. What led us to continuing to move higher? So hopefully all that stuff has made sense. So again, you know, something like this, if it wicks below a low, that's totally unreliable, okay? For you to shift or change your perspective from one direction to the other. So if we were to get down into here, it'd have to do something like this, but to the downside, right? Like a displacement like this or something like that, right? Not a wick, right? Because if it just wicks below something, that's most of the time going to be a stop rate, okay? So yeah, you got to keep that in mind as we, you know, walk forward. All right, so again, we're going to stick to our narrative going higher. We got this high here that is previous day's high, but it's also London high. So we got relative equal highs up there. If we come over here, we could see there's actually an SMT there. The S&P and the Nasdaq both have lower highs. So if there is going to be a short, if we do break down, it's most likely going to break down a lot more aggressively in the S&P and the Nasdaq. Right, we're in consolidation, right? It's accumulating. So we have to wait to see what it's going to do going into the open. Again, we do have a landmine field of amazing news events that are going to come out and shake the whole entire market, I'm sure. Our assumption that price would go continuously higher as a result of the rate cuts, that assumption was forecasted months in advance in terms of the reaction that could take place. So the foresight hopefully has been pretty impressive to you. But more importantly, hopefully it's been clear for you to understand, right? So you can understand that news event, rate cuts when we're at all-time highs, and then you've hopefully saved a lot of this price action in screenshots and put it in your journal as a study for rate cuts, as a study for the month of or the summer months, and then of course going into a new quarter of September, how the vibe has been off the heels of that. Okay. So yeah, the 1st of September was here. So you kind of see what's happened prior to that. Once September came, there's a bullish seasonal influence, and it's the fourth quarter. Okay, so and things pick up for the fourth quarter. Isn't it interesting to see how aggressive it has been, how much easier it's been to read versus what it did previously? So you see the visual difference in the characteristics seasonally. So again, these are things you want to pay attention to, so the next year and the year after that and all the years moving forward, you have like a rough baseline of what your assumptions will be. And then if you could find that agreeing in the chart, I mean, hopefully you could see the value in that, It's one of those critical things that I use. It's something ICT calls a treasure map, seasonal influences. So hopefully if you haven't been using it or looking into it, you will look into it. I've talked about a drill I give my students to do for seasonality, how to study it. So hopefully those of you that have got that teaching, hopefully you guys have been doing that. Again, I encourage you guys in my private group, if you haven't sent it to me already, I know some of you are here, if you do a study like that, you need to send it to me, right? I need to see it. And just a reminder for anyone that hasn't sent me their trading plan. I know some of you are working on it. I had some one-on-ones this weekend, so I've talked to some of you. But those of you that hop on these live calls, which a lot of you do in my private group, if you haven't done that, this is a friendly reminder to send it to me, right? Help me help you, right? Yeah, so just a little bit of housekeeping real quick. But yeah, so hopefully it makes sense as far as what I'm looking for, what I think you should be looking for or consider looking for. This ain't financial advice. I'm not a financial advisor. You're going to do what you will with the information. You're not going to take trades just because I tell you to. I'm going to give you frameworks, as always, and we're going to determine what price is going to do, and you have to use your model, whatever that is, to justify whatever it is that you're going to do. Okay? I do think that we are at a time where price may top out. It's been absolutely parabolic. What goes up must come down. And because it's been so aggressive, everybody's trying to buy. Psychologically, everyone's got FOMO for the most part. Does that mean you pick a top? Absolutely not. Right? But like I said, we're going to be watching what this is going to do here. We've already taken the previous week's high, so liquidity has now been engaged from previous week. It's also Friday's high. And it's been very aggressive from the last couple days. Right? So everybody's thinking they're missing out. Does that mean it's going to top? No. When do we decide it's potentially going to top? If we break down below this 4-hour fair value gap, and then we're going to study how the reaction will be from that, and then that'll determine whether price is going to want to dig down, to Friday's low, because that would be one of my main targets. And then, of course, breaking down below that, targeting Friday's low may set the stage for us to get down here. This high to that low, right? All of that has delivered both sides. If you move up in time frame, you'll see that that's potentially an order block on one of those upper time frames. We also have this high to low, right? We respected the wick. We pointed that out yesterday in the live call. I think I had that outlined on Sunday too, in anticipation for what has taken place. And we can see that all that's been respected. So once that starts to get broken and violated, it's no longer supporting the bullish order flow. Okay, at least for the short term, right? And then of course, if you go up in time frame, you want to make sure you're staying calibrated to what's available on this higher time frame, so you don't get fooled into thinking that, oh, the market's going to totally be destroyed because it drops down below a 4-hour fair value gap. Okay. Oh yeah, just a reminder, if you guys get value from the content, don't forget to like the video, share with your friends who you think can get some value, or maybe even provide value in the chat. This family's growing, and it's going to grow because of you guys. It's not going to grow because I'm going to do ads. I'm not going to do anything like that. It's going to grow because people have good experiences here, and they share the content, and they engage with, liking, helping tell YouTube that we're worth listening to, because in my opinion, I think we are worth listening to. It's been 9 straight months. Every single week we've had the bias and narrative 100% correct. There's been fluctuations on the daily chart, on the lower time frame, of course. That's to be expected because of consolidations, retracements, and whatnot. But the overall sentiment, some accomplishments we've had, and overall sentiment ideas have been correct in a high percentage. But some of the accomplishments, we've picked the low of the year, okay, at the yearly order block. We were ahead of that. We talked about the entire decline at the start of the year because the news basically was telling everybody that the whole world was going to end because of the current president in the United States, which has proven to be a lie. And then so not only did we call the drop, we called the low accurately. We called when it was going to go back in line with bullishness. And then ever since, every single week, we've been pretty much 100% accurate with where price is going to go. So those are just some things that we have been able to accomplish this year, let alone the fact that I have over 36 students that have passed funded accounts between the YouTube channel, just this YouTube channel and the videos I provide, and then of course in my private group. Right, I've had one student who's less than 20 years old, or less than 21 years old. I think he may be turning 20 this year. I think he pretty much had a 10K month, and he's only been training for 2 years, and he spent most of his time learning from me. So that's just one of many testimonies, aside from the hundreds of other testimonials that I have shared. So again, I say that I'm highlighting this because it's hard to trust people. I've had a lot of new people come to me, and these are just some reasons why we can be trusted, right? Or why you should investigate, right, and spend time here outside of the nonsense you see on social media. And of course, you'll build your own opinion, and I encourage you to do so. I don't expect anybody to automatically trust. I don't encourage you to do that, but I do encourage you to listen to some of the things that we provide. And I think you'll be happily surprised, right? Even though the channel doesn't have 100K subscribers and all that, I'm not too concerned about that. But, the bigger we get, the more people's lives we can impact. So again, it's much appreciated for those of you that do support the channel and see the value in what it is we do. And again, just don't forget to like the video, subscribe to the channel. Those are free things you can do to support the channel. And we're going to keep crushing it, and hopefully we could build a longer list of testimonials and lives being changed, right? And clarity being accomplished. There's nothing like these concepts. Nobody can compete, even with the lower tier ICT traders, when it comes to retail versus this logic. So, you could just see from the evidence on funded accounts. More ICT traders have gotten funded accounts than every single style of trading. There's some good traders obviously outside of ICT concepts. That's not the only way to do things, but these concepts are unlike anything else. So, and I'm sure many of you guys have already realized that, right? But yeah, so again, hopefully it makes sense as far as what we're looking for. And we're just going to wait till the open happens. We're going to see what the reaction is going to be. We do have this inversion fair value gap on the daily that I was talking about for the DXY. We do have relative equal highs above us. We have been stopped by the weekly bearish order block, right? Go to the daily chart. It's also a daily bearish order block. That one's been a bit contested, right? Pretty intensely. We have closed back below the 50% of that though. So we're going to definitely be paying more attention to this. Actually, I think this one's more important. And then of course, like I said, the weekly bearish order block. So I can say that if we have this high that gets left, we leave this low, this high gets left like it is, and then we have a failure swing potentially at this level that then displaces above this high. This is what I call a type 2 dealing range. There's only a handful of people that talk about this logic, type 1, type 2 dealing ranges, and they are obviously ICT traders. And, you know, it's definitely advanced market structure to identify reversals and how to confirm a reversal. This logic is what I used to pick the low of the year, right? Being able to anticipate or see something like this happening, seeing it unfold, and then, you know, we were allowed to get in line with what the market decided to do at that time, using the logic of type 1 and type 2 dealing ranges. In this case, and in that case, it was a type 2 dealing range that was confirmed by breaking this high. All right, if you have a high, a low, high, and a failure swing, once the high here is broken, that generally turns the market, whether it's short term because it's a lower time frame, or sometimes long term, like I pointed out from the yearly perspective when we pick that low of the year. Okay, so I talk about this here and there on YouTube. I've went into great detail in my private group about this and the other one and many other things. But hopefully this is clear enough, right? Visually, you could see this and go back and back test, and you'll see this phenomenon, especially after it takes a sell side liquidity pool. It absolutely puts you in line with the turnaround. If you're more, especially if you're more of a conservative trader, like you want to be more confirmation based, reliably. You know, this is something that really can help you pick a bottom accurately or pick a top accurately, but it obviously takes time, and you know, it's the higher time frame, right? So there are two types of dealing ranges, absolutely, type 1 and type 2. I think I posted a diagram in the free Discord. There's a lot to it, but visually what it looks like, there's definitely enough from that visual. This is one of them. I think if I'm not mistaken, I did post the two diagrams. There's a bunch of different variations, but these are the main two that I use, type 1 and type 2. All right, so we got the open coming in a couple minutes. Let me see, did I miss any questions? Oh, and another thing, the type 1 and type 2 dealing ranges is a variation of a balanced price range. Dun, 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 that word again, right? It's very important, balanced price ranges. So yeah, you know, again, everything that I talk about, everything that you see me do, there is depths that you could take it that you can't even imagine. You don't have to be a freak of nature like I've tried to be, and like ICT is and stuff like that to be successful. But at the same time, it does make things a little bit easier. You know what I mean? But yeah, so again, we're going to be looking for this to go higher. We run the risk of us breaking down and going below these lows here, maybe even creating a market maker sell model if we do get a displacement that gets below this 4-hour fair value gap. So that's kind of like the landscape that we're playing with right now. Okay. Again, we called this entire run higher yesterday with my private group. We were able to, participate in this. Those of you in my private group, you're on the call. You were here yesterday, so if I was not being truthful, they would come out and call me out. There's no reason not to if I'm lying about something, which I never do. So yeah, just know this was definitely anticipatable. Had multiple entry opportunities, and yeah, it was anticipated before the fact. So again, I'm anticipating or wanting to watch what this SMT is going to do here. Because again, like I said, we have SMT at the highs. Go to the 1 hour. Failure, but it does have equal highs. I wouldn't be surprised if they peak above it, and then the S&P potentially is the one that doesn't break the high. Obviously, we see that the Dow is ripping. We're not going to pick a top, so there's no short ideas happening at all whatsoever. And we just had the news come out, so that has really pumped this up. So unless this 4-hour fair value gap is broken, our interest is to the buy side, right? We got to think of power 3. That would be justified if to the downside. Power 3 would be justified if we break down below this. So line in the sand for me to get away from thinking the buys are going to be off the table is going to be down below this. And then how we respond to this 4-hour level here is what will make me determine whether Friday's low will be more of a reasonable target than us continuing. Right, and then of course if we were to break down all the way to there, I wouldn't be surprised if these equal lows get put in jeopardy. Right, that is a ways away. Obviously, it's going to take probably a week or two, depending on what the news does. But yeah, there's things that we have to wait for, and we're going to stick to our narrative as we always do, until proven otherwise. And for me, because the news is ahead of us, a lot of news is ahead of us. We are going to be extra patient. We're going to wait. We're not going to worry about missing a setup. Yesterday was a good example of that. We sat through all of this decline, and then once it got in line with what we were looking for, we were able to engage, which I showed the execution on Instagram, right? By taking a picture of it, right? So yeah. And I had some students also engage without me telling them to enter. They just listened to what I was explaining, and they took it upon themselves, as should be the case when you're studying somebody. Because if not, you're building codependency, right? So yeah, let's... we got the new day opening gap right in this level. Again, we got that SMT at the highs. So we got to keep tabs on that. There's a shift in this, right, above the high after taking stops, but we have definitely left equal lows here. So I would prefer to see them get down below here. I mean, they may just use this and continue to rip it. Things like the Dow and the DXY are going to continue to support buy side. It looks like the S&P is still supporting it. Again, I'm not concerned with any of this, first 20 minutes. Or first 15 minutes, because we have news, heavy news, coming at 6:45. PMI is vicious at times. Okay, so we're gonna want to make sure we are waiting, because these are all landmines. It could either support us continuing going higher, or it could be the exact reason they use to punch price against the buy side delivery. All right, and then potentially set the high and maybe take a nosedive to the sell side. So yeah. Then again, we have the DXY. If we go over here, throw some of the annotations on. Like I said, we have this fair value gap, but we have this order block. So we got to monitor how this is going to behave overall. Is it going to violate the 50% and invert that fair value gap, or reclaim that fair value gap to go lower? Or is it going to use this daily bullish order block as a launching pad to target these upper levels, creating that type 2 dealing range, and then continue to dig a little bit deeper to the buy side, right? So those are the scenarios we're watching. For now, we're going to continue to hold on to the idea that price has not fully changed the state of delivery overall. It hasn't confirmed it yet, right? That the downside is going to be given up on. This whole move has happened after we swept the quarterly low. Okay, but the structure has not changed. Have we shifted market structure anywhere in here on this daily chart for the daily perspective? No. All right, we have not. When does that happen? When we break this high, right? And that's also, again, sets up a type 2 dealing range, reversal, right? And so then that could be reliable to then start to seek buy side in this asset and sell side in this one. Otherwise, if it just stays the way that it is, we're going to keep our opinion pushing price through to the buy side, and then assuming that we'll continue to look for downside in the DXY, right? So yeah, that is our opinion for now. We have the Power 3 projection tactic ICT talks about, right? We have 1, 2, 3, 4 standard deviations. We want to make sure that we are, well, actually, I think these are halves, right? So half, 1, half, 2. Okay, so generally we want to see price manipulate, within, at least before the second standard deviation, and then we want to see a reaction, right? That supports the manipulation into this to then continue to go higher if it does displace and prove that it wants to hold this 4-hour fair value gap. So we merged standard deviations with the 4-hour fair value gap. All right, we could see this is the 1-hour chart or 1-hour candle here. That's we got Power 3 happening on all time frames, including the 1-hour. We see that the Power 3 so far for the daily looks like it's rallied up. I don't like these equal highs, but it's also declined now back below the open price. So we're going to have to see what price is going to want to do going into this news event. And right now, if you were to take a short, you're gambling. I mean, you're gambling. Even if it does drop, what is the justification for that? Right? You're just going to basically be assuming or picking the high before anything has really confirmed overall. And that's not repeatable. There's no consistency available in that type of perspective. It is an aggressive form of trading if that's something that you see, right? If you have a model in here that's performing, it's aggressive. That's not how I do things, right? And so I will wait, and hopefully you understand why I will be waiting. And we're going to watch for what the news is going to do and how we engage these relative equal lows. So it's engaged. The sell side DXY is pulling a little bit to the buy side. We'll see if that continues. We got this pattern in here. We got the low, high, lower low. It's basically broke outside of this breaker here that should have held if it was going to continue to drop. We do have a failure swing in here. Go to 15-minute, 30-minute. Again, we're monitoring to see if we can get a type 2 dealing range delivery in here. That'll be confirmed if we can get above that. It's risky to try to think that this is going to go higher until it proves it because of the weekly bearish order block. Okay? So we're going to wait and monitor how this is going to behave. Assuming that this should be able to hold and go lower, assuming that that's also going to lead to this sweeping the lows and then rallying because nothing's changed. But once it starts to show interest that it wants to go the other way, if it does, we'll be able to be flexible and get in line with that. But obviously that's going to take some time. If it does end up getting down below this 4-hour level here, again, we'll then have a market maker sell model framework to identify. We could see this as a potential smart money reversal up at the high up here. And then the accumulation in here, reaccumulation in here. Each of those portions of price delivery would potentially offer a short potential idea, and then we can especially trust it if it gets back down below the 4-hour, right? So again, don't forget to like the video if you get value from the content. It definitely helps the channel out, and it's much appreciated. Unless you hate the content, right? If you hate the content, then all right, I understand. But if you hate the content, I'm not too sure what you're doing. But yeah, so yeah, watch this fair value gap in here. We'll keep attention on that. We also have one in here. So let me see, go to 15-minute. These consecutive down candles. Let's move up. Is that a 1-hour order block? No, it's just kind of a mess in there. So yeah, like I said, let's keep our eyes on this, see what it wants to do. Again, everything that's happening right now, because of the news landscape, you got to be very cautious, right? You got to be very cautious, and we got to see what's happening in here, what it's going to want to do. So now we're getting further commitment to dig into the sell side. Remember, these standard deviation levels, each level is like it's a line in the sand, right? And the more of those levels that get violated, if it leads to the 4-hour getting taken out as well and then inverted, I mean, you could probably understand that, you know, we're now changing, and forcing things would obviously be ill-advised. I don't like the fact that we have the buy side so available, because there's an SMT though that may prove to be the reason it's held. And of course, like I said, the risk of the euphoria being hurt, being targeted, is highly likely given the fact that it's been so parabolic. You know, at some point it's going to, you know, end up topping out, right? But we don't pick tops, and hopefully you guys understand, based on what I've been talking about, how we're going to determine if it's sincerely topping out, right? So we're going to continue to watch how this is going to treat this. Take this low down here, what started the move, measure it up to the high, we can get equilibrium. Let's see. So we got the equilibrium there, right? So it's down here. That's the discount based on this range. Move up. I mean, you could see that this obviously started the move. This was the most energetic. So the energy behind, or the energy after a swing low is formed, generally that's where you want to place like that's where you want to anchor, like the low in this case of your fib. Obviously, you know the whole range is important, but this gets you a little bit more accurate. If you trade the optimal trade entry, you'll notice that sometimes it won't hit your optimal trade entry level. At least that's what I noticed when I was first digging into the content, because that's all I had at first to look at. But I noticed that you know, when you move it a little bit to the most energetic swing low, which is what ICT talks about, he's mentioned this before. Once you do that, it gets you closer to the actual price points that the algorithm is referring to, right? And then you could see that, you know, there's more opportunities that are available to you, and you don't miss as many moves if that's your model, obviously. But even if you're just observing, using it as a tool like we are here, it just gets you closer to the actual levels that price wants to use, right? So yeah, equilibrium's right there, right within this little area in there. This is all within the 4-hour fair value gap. So again, we're monitoring to see what this is going to do. Is this going to be respected and run higher? Try to target the highs up here once more? Or are we going to violate this 4-hour fair value gap and then get our attention focused on the sell side delivery? Right? Regardless of the opinion or what we think we're going to do, we got to wait. Right? I'm not going to get in here and start just throwing trades in. That's just not what I do. Right, we got these equal highs up here too. That's pretty suspect. All right, so again, if this does choose to decline here and start, digging towards some of these levels we're using as validation, obviously the SMT that we pointed out earlier will have been the influence that caused it. We see this massive crack in correlation between the three assets. That puts us in low probability, right? And any execution that I would take by default when there's a crack in correlation is a C grade trade, because the first mode of high probability is, are the markets symmetrical, right? Like, is everything moving the way that it traditionally should move based on risk on, risk off understanding, basically the whole market sentiment. And when things are just disjointed, cracked, right, and correlation's not really there, you got to be very cautious. That's a very, very large part of our confirmation process and high probability engagement. So yeah, it tells you when you should trade, when to be more cautious, or when to just not take a trade at all. Right? So yeah, we'll see what happens. So if we see this 4-hour, right, we could break that down into quadrants, get a little bit more precision when it comes to certain price levels. It's pretty interesting how the half standard deviation levels line up so perfectly with the quadrants in the fair value gap. It's a very interesting overlap there. So these levels should be especially sensitive. So yeah, we'll just be waiting. Yo, what's up, Byron? Man. What's up, bro? Bro, I gotta pull you onto a live stream with me, bro. I think that'd be fun. Could like co-host the live stream. Bro, if you don't have a YouTube channel, like, I don't know why you don't have a YouTube channel and do some live streams, bro. Byron, you should start doing that. Oh, man. So yeah, what's the vibe? So we're pretty much watching to see what price is going to do below this low. Inside this 4-hour. That's a 4-hour fair value gap. All right. So, my anticipation is that price is going to continue to go higher, like I said earlier. Shorts are going to come. I'm not going to be confident in shorts until proven, especially with this massive crack in correlation here. We got to see a real commitment, right? This, like I was talking about earlier, maybe setting up a reversal. We need to have further evidence of like this breaking, because once that breaks, that 100% confirms, or as close as you can get to 100% confirm that this high will be targeted. All right, if it fails, then obviously, there's a chance for it to get back down below here, because structurally nothing has changed. Right? Picking the top in a parabolic bull run, it's highly risky. You may get lucky, you know, you may get that timing correct, but we have too much news that can cause a problem. Then I think one just came out, yeah, 6:45. So news just came out. So let's see if they upset all the delivery that just happened, or is it going to help confirm, right, or support the idea that price is going to go lower. So actual PMI is generally pretty aggressive. So yeah, it's so far looking like the SMT is still holding, right? Again, we're still inside of a 4-hour fair value gap that could just very simply be used to push price to the buy side until it gets overlapped. Because then once that happens, it should act as an inversion and it should be leaving behind a balanced price range, right? So if a balanced price range is left, right, that sets the stage for us to target the lows like we talked about. All right, but again, all that takes time because we're rooted in this higher time frame, you know. So yeah, we'll see. We'll see as the session matures a little bit. We're inside the macro here. So the 650 macro, it's one of my favorite macros. So let's see if we can get a reaction from this 4-hour. So we're at the 25% level. So yeah, let's see what happens in here. So fair value gap here. So some stuff to watch. If price is going to go lower, this low to that high, we should not return or even attempt to return to the 50% level of this area. Is that that's at the open price from, well, the bond market open. That's not the middle. So yeah, this right here needs to stay respected. If price is going to go lower, it should not really even have to get back outside of the 4-hour here, right? Those are early signs that we, you know, continue to dig to the sell side. But yeah, so I'm just in a mode of observation. Right? I'm not an overly aggressive trader. That serves me well for my style of trading. So, you know, maybe you're more aggressive. You know, if that's the case, don't let me sway you. I definitely do want to encourage you to think about why my style is the way it is, because maybe it'll help you develop in some ways. So yeah, we do have a lower time frame run on stops here underneath the larger SMT at the highs. This is not something that is high probability, right? Again, the first identifier of high probability or low probability is correlation. You know, we'll see if that changes, right? It could very well change later. But for now, you know, we got to be cautious and let some of this news come out. I mean, we got a landmine pretty much at almost every hour, from this hour to the 7 o'clock time, AM Pacific Standard Time. I've never really seen this do much. It may have used this beginning news to manipulate, right? And, you know, it could totally upset it. So I don't trust any of this to the downside. I mean, there is an argument if you did have a short opinion that you could have potentially got into something like this. There's not going to be much of an argument to that. I personally wouldn't be able to engage something like this because of my rules. I don't take executions before generally the first macro. This macro here seems to be delivering. But again, correlation is just all over the place. So I would rather be more conservative. It's kind of just how I do things, Got that order block, so that makes sense. Getting below this, right? It should continue to respect this level like this, right? If it is going to hold and go lower, this should be a rolling balanced price range, right? As a price leg is printed, for the most part, price will be, creating order blocks. What are order blocks? They're a form of balanced price range. So that's kind of how you want to look at things. Let me see. Lucas, welcome, Lucas. I'm not sure if you're new, but welcome. Price is likely held. Yeah, I 100% agree. That's kind of why I've been talking about we got to be more patient, more cautious because of the landscape when it comes to the news. We could very easily see the first couple leading up into the Fed speech pretty much be fake, right? More often than not, that's what happens. They use a large news list in the first beginning stage is generally like a fake out, purge of liquidity, pull people's interest into one side, really mess with the sentiment ideas, especially if people aren't looking at the higher time frame like we are. We're observing the fact that we're at a 4-hour fair value gap that could be a retracement to go higher, given we're still bullish overall. But they could use the news, if people aren't looking at the higher time frame, to really fool people when it's so busy. Right, so that's why I'm saying that I'm not going to trust taking a short or flipping my opinion to taking a short unless it was to violate, or until it was to violate this 4-hour fair value gap, and then basically invert that. That would then put us in position to frame this move higher to go lower as a market maker sell model, and then we could use this candle down here as a type 2 deal, not type 2 dealing range, but a second stage distribution that could then reasonably be anticipated to blow out the low. And then of course if this low is taken, Friday's low is right there, so that could set that scenario up. But again, that's a contingency plan against the fact that price is still bullish. None of this stuff is showing that it's overwhelmingly going to go higher or go lower for the indices. DXY still has structural integrity to continue to go lower. Right, so I'm observing this. Once we get down below this again, that would give us certainty that it is going to go lower. Because we're here, right, and it's kind of just stalled out, and there's an order block on the daily and a fair value gap that's overlapped, we have to monitor, right? We're in a stage where we have to be very cautious, especially because the news, aside from some of these other things that I just mentioned structurally, right? Let the gamblers get in there and gamble, right? Again, like I said, the short idea, if any of you guys did start the day with a short idea, obviously it did offer something, but because the higher time frame is not fully engaged in that, or at least fully supporting that idea, and the higher time frame structural integrity is still intact to go higher, it's a bit risky to try to hold it beyond what was already delivered. Obviously it seems to be continuing to deliver a little bit further. It's respecting this idea that I just pointed out, right? With this being a potential order block, BPR, rolling balanced price range, right? So we'll see if that is going to continue. Again, I personally I'm not behind this, especially, look at the DXY, look at the Dow, right? Look at the Kraken correlation, look at the news that's still ahead of us. All that stuff goes against you, So long term, profitable traders have to be calm. They have to be aware of the surroundings. You don't want to run into, like, if this is war, which it is, you don't want to run into the battlefield knowing that there's bullets flying all over the place and be reckless and then potentially get hit, right? You might as well just wait till the gunfire stops and pick your battles wisely. And in this case, it's not a battle I would be wanting to participate in. And there could be an argument as far as, oh, maybe the move here was missed. Like I said, if you did have the opinion that's going to go lower, you should be able to have gotten in, right? Assuming that your model's there. But this is just an example of me just allowing price to move because I'm looking for something very particular. And once it confirms that a switch is going to happen, I'll be happy to be flexible. For now, though, I'm not interested in taking this. The risk of this fair value gap still acting as support and then breaking up, taking these people out, continuing the buy side, I mean, that's still there, especially now with DXY rejecting like this. And then, of course, the news that's ahead of us. So over the years, I've learned that scenarios like this, it's best to be cautious and potentially miss something than be reckless and get in something that doesn't align with what it is that I personally do. Again, that's me, right? If there was something in here that made sense to you, don't let me sway you. I'm just sharing my opinion. That's literally all it is. Of course, generally, this year we've been pretty accurate, right? But again, I have my rules. Some of the you will adopt, some of the perspectives you'll adopt, and some you won't. That's the beauty in trading. We're all different. And who knows? Maybe you catch the short, and then eventually price rallies, and I catch the buy. Was anybody wrong in that perspective or in that scenario? You can make the argument that no, if you made money, if you engaged, that was something, and it was something profitable, you're not wrong just because you didn't get the entire direction correct. We're here to make money. We're not here to show off as far as who could be more right than the next person. Who can make money, okay? And of course that's going to solely be dependent on you, but that's all that matters. And understanding what it is that you're doing things that are repeatable, which again is something that I really focus on here. What just happened to my broker? That was weird. Okay. I hope the connection has been okay. I've been getting a lot of notifications about the sound, not from you guys, but from the YouTube studio. It's telling me the bit rate is this and that, and caution signs saying a bunch of things. So yeah, if there's any problems like the sound or visually, just let me know. I don't know what to believe. So I'll believe you guys because YouTube doesn't know what the hell's going on, I guess. Yes. Okay, so DXY is really reactive from that daily fair value gap. If we don't hold here on the DXY and it blasts through this, I mean, these are early signs that price is going to continue to dig into that 4-hour fair value gap. Again, I'm not interested at the moment in taking a short, and I'm okay with, just not engaging something that I'm not comfortable with, and I'm honest enough to tell you when I don't feel comfortable, unlike most people on the internet. Let me see. All right, so let's see what happens here. So yeah, it is really opening up. Let's go look at the bonds and yields. Remember, this is what I've been looking for. I want to see if we can get down and send the bonds higher. That promotes buy side for the indices. And then of course, if this does this and favors a downside, which I'm assuming because of the rate cut, if you cut a rate, it drops, right? So, and then that drops the DXY, that rises the overall indices. So that's kind of the basis of our opinion, aside from the technicals being what they are. If that's the case, obviously currency should go higher, DXY should go lower, which is why I'm in a mode of waiting to see how we react here. Same with this. All right, you see why I haven't forced a short? So let's see if my waiting pays off in terms of not allowing me to get into an entry that's unworthy. And so if this gets violated in here, you could then somewhat switch your opinion or perspective to then study this, right? The high here, low here, shift above this high potentially. And then you could monitor this here, right? And then if it was to break above that, but just basically wick and then slam below the 50% of this balanced price range, that is enough for me to anticipate price at least trying to target the 75% level down here. Then maybe even slide all the way down to here. And then if it was to do that, again, that's a lot more trustworthy in terms of the overall landscape for us to then try to look for more reliable short positions. Yeah, let's see how DXY behaves in here. We are in a range-bound environment with the DXY. That is a problem. Okay, that's not helpful in terms of building trust and clarity, which is the main two objectives when I'm here live or in my private group sharing my opinion. Because once you get to that point, you can make your own decisions. You know, that's the main goal. You know, some people don't like that. Pound sand. It's too bad. But yeah, so if we look at this, we got a wick here, so we definitely want to watch what that wick is going to do. Mark that off. You know, if it starts to continue to respect this, leaves fair value gaps open, is very reactive to bearish order blocks, responds in a bearish way to these quadrant levels every time they're broken through. Those are signatures in price telling you that order flow may be turning, right? Like actual logic and signatures in price telling you that we may be turning. Other than, oh, it broke down, so I think it's going to go lower, right? Such a myopic, you know, view that you can't necessarily be consistent with, or at least trustworthy consistency, right? Yeah, so we got this like railroad in here, right? Like up and down. So again, if this is going to hold and go lower, it's going to have to stay below this. Right, we've got a fair value gap in here. Breaking down below that would be pretty useful too. But again, if that happens, that is in no way supporting the run lower. You know, so it disqualifies any type of execution for me to take a short. And those of you that know me, I follow my rules to the max. And sometimes it, you know, pays off. Most of the time it pays off. Sometimes it keeps you out of moves like this that could have been profitable. But that's the cost of discipline, of long-term being able to say that you're going to be here when everybody else is not, you know. But that's the cost of discipline, you know. Cost of discipline is also success or failure, especially in this industry. So yeah, let's see what happens in here. Got that fair value gap. see what happens. So yeah, remember, this is a wick in here. It's a wick that was going higher. It's a 50% level. So I'm much more favoring buy side. This right here may turn into a market maker buy model. And if that market maker buy model framework in here, right, accumulation, consolidation, accumulation, reaccumulation, smart money reversal, right, low risk buy should be able to be presented somewhere in here. And the first stage distribution should be somewhere above this high. Second stage distribution would be presented potentially if it gets up in here. And then that should quickly run price above these equal highs if it's going to continue to support that. And if that fails, again, that's another indication that we may be transitioning from, going higher to go lower by seeing failed market maker buy models. It's pretty powerful indications. This is obviously the lower time frames, the 1 minute. So, we do got to keep in mind that, this is a displacement. We do a fair value gap right here. This low to that high, buy side's taken here, sell side's taken. So this low to that high, we should not return to the 50% level, right? If it's obviously going to go lower. So yeah, here is a pretty solid reaction from this fair value gap. The 50% level of this low to that high, basically, mapping out, what I just had was assuming that it was going to break this high. We can see that the 50% level here, it's ironic that the 50% level from this low to that high is in alignment with the 25% of that fair value gap. These are great overlapping levels to see. And if price gives a response like it is here, if it continues and say breaks down below this, we're going to need a serious displacement to the buy side to get back in line with something going higher. Otherwise, like I said, it could continue to press lower through into this fair value gap. Right? But if you're looking at the 5-minute chart and you saw this fair value gap, right? This is something I like to always ask. If you saw this fair value gap on the 5-minute, would this retracement into the 5-minute change your opinion if instead of this being the 4-hour, it was a 5-minute chart? Right? Would this delivery showing up on the 5-minute pull you away from the fact that you think price is going to go higher? Or would it simply just look like a retracement unless it was to be invalidated? Right? These are very important perspectives to have, especially when you're navigating higher time frame delivery, and you like to execute on a lower time frame. You don't want to lose the plot, and if you spend too much time on those lower time frames just looking for entries while disregarding the full picture, you could put yourself in a bad position. And that's a lot of times why people are inconsistent, because they're so married to one time frame that they execute on, which, on the lower time frame, that they literally can't see the forest for the trees. They're too close to price, right? They can't see the big picture. And here I try to get you guys to not think that way, right? So yeah, let's see what's going to happen here. We're in time distortion. Like Lucas said, very wisely, we're probably being held right now. The Fed speech, that's one of those red folder news events that we treat similar to FOMC, NFP. It's a very cautious moment in time, because anything this man says, good or bad, literally will destroy people. It's proven time and time again. And it just, it's one of those risks, like hearing gunfire, right? Gunfire in a battlefield. You got to be more cautious. You don't want to get your head blown off, right? Yeah, Brown is a 6-minute chart. Seven. Let's see if we can move up and find a larger one. Yeah. Guess we could use this one. Have more of a 15-minute view. Probably a better anchor point, honestly. So yeah, let's see what happens here. Well, it's definitely having a hard time rallying, that's for sure. Looks like a good lunch. Yeah, Lucas, I would have to agree with that. That may be what this overall view is, right? We may have the lunch session or lunch hour and the PM session end up being what is the most dynamic. Mind you, the Fed speech happens beyond the AM session. So the whole AM session could be used as manipulation. You know, there's a risk of that. You know, it's very important to understand that. You know, you see why I haven't taken a short? If I was in a short right now, or if you were in a short right now, you'd be kind of worried, right? Is it showing you that it's excited to go lower? Is there intermarket relationships that are supporting you to make it so your trust is just through the roof? No, you'd be uncertain. I know I would. I'd be like, I don't know if I could trust it, especially because the higher time frame is still bullish, right? That's kind of the point, right? That's kind of why they're doing this, because it gets you thinking that way, like gets you worried, gets you concerned, right? You shouldn't really have too much to worry about. Even if you get something wrong, you don't want to be thinking that it's life and death unless you're over leveraged. You know, losing's part of the game. You know, you're going to take losses. It's never going to be something you can fully avoid. But when you know, with wisdom over time, when you know a condition is not as ideal as you know it could be, you'll eventually grow into this maturity where you're okay with not taking a trade. You know, it's better to not take a trade or miss something than it is to take a reckless trade and lose and break your rules, right? Because one will last a long time. Breaking your rules, being reckless, that stuff will last up, you know, sometimes your whole career in terms of you being upset about it. But missing a setup, I mean, you forget about it in like an hour, right? By following your rules, right? It's better also to take a loss when you follow your rules than it is to break your rules and take a loss. Because again, if you follow your rules, you have nothing to worry about. You did what you told yourself to do, and you're being disciplined, and you've worked on the system, and you've respected the system, versus breaking your rules and then taking a loss and then regretting. You know, taking a trade while you're following your rules that results in a loss has a whole lot less regret, if any at all, than it does when you break your rules and act reckless, right? And over time, you learn to appreciate that, right? You learn to really, really lean into following the rules. Because if you don't follow the rules and you're trading a system, a lot of times people will break the rules in a system they learn and then blame the system. Whose fault is it really in that scenario, right? Is it the system's fault? Is it the market's fault? Or is it solely your fault for lacking discipline and just not following instructions, right? It's always going to be us, no matter what. You know, it's never the market's fault. It's never the conditions' fault. Okay? It's always our fault. We pushed a button, and we either decide to be disciplined or not disciplined. You know, and you when you tell yourself to do something, when you know there are certain things you're supposed to do, and you intentionally break those rules or those processes, you choose to do what you feel like doing outside of the things that you know work, that's when self-image gets damaged. That's when scar tissue is built. That's when you feel like you can't trust yourself. So the fear gets even more intense because you can't even trust yourself to do what it is that you're telling yourself to do. your emotions are making you make dumb decisions, and then they result in bad engagements. And then it's in all of us to try to blame things outside of ourselves. But when you blame this person, that person, this market, that this thing, that thing, when in reality you just didn't follow the rules, you disable your ability to learn, to make the improvements, because it's someone else's fault. That's why this victimhood mentality that people have these days, and then blaming everybody else, that's why people don't improve in their lives in general, let alone trading, because it's always someone else's fault. They give the power of change to somebody else, or they give the ability to change and improve to somebody else, and they never improve because of it. So it's a very relevant thing to think about in trading. Most people don't think about this type of stuff. Most mentors don't talk about this type of stuff, because they don't sincerely have the person that's listening's best interest in mind. They have a alternative agenda, for whatever they're trying to do, for themselves. And they're not truly here to help. But that's what makes this community different, And because I don't feed into that mindset that people are comfortable with, sometimes, makes people not want to stick around. And that's totally fine. Because the ones that stick around, the ones that listen to this good advice, the ones that make the changes and admit when, this type of stuff is present in their engagements, in their mindset, they're able to make changes. And those changes are incredible to see over time, which is one of the main reasons why I enjoy being like a mentor, right? And teaching and sharing my perspective, because I know it helps. It changes people's minds. And I mean, it's just incredible to see the improvement. Students can get taken from, I don't know if I'll ever be able to do this, to, man, I do believe I can do this. And even though I take losses sometimes, it doesn't matter, right? When before they came here and or listened to this type of advice, they would think, oh, I can never do it, So yeah, just some things to think about, you guys. Don't give the power to things that don't deserve the power. You need to retain the power of change. And the only way you do that is by holding yourself accountable. By really honestly looking at what it is that you do. Are you following the rules? Are you somebody that you would trust with your money? If you were say you were the person that's managing for a big fund, and you were interviewing yourself, right? Because you were going to give yourself money. The way that you trade currently, right? The things that you do, the habits you have, the way you live your life even, would you trust your money in your hands if you were like a client and on the other side you were there too as the money manager? Right? These are little thought experiments ICT has talked about, which most people don't get to hear because they don't sit through his super long videos and Twitter spaces and whatnot. But these are very important things. These are things outside of the norm, right, of thinking when it comes to trying to improve and be a better trader, what it really takes. But that's why 90% of people fail, because they want to just get the entry. They want to be reaffirmed in their wrong thinking because that's what's comfortable. And that doesn't do anybody anything. That just keeps you stuck in a loop of nonsense, never changing. So yeah, looks like prices potentially getting ready to make some kind of move. Right, it hasn't really done much of anything, but it has held inside this BPR I highlighted. It has pretty much held below that. Wait, it's not an order block. Wait, was it? Let me see. That was the wick that I'm trying to watch. Notice how the 50% of that wick has been respected. This is not indicating to us that it's ready to go higher at all, right? The short made people work for it, right? I was not willing to sit through this time distortion. It's just the way it is. But overall, the balanced price range idea, right? The levels that I mentioned are laid out that should hold, right? The reactions we're getting. There's some trustworthiness there, especially with DXY failing to give a strong displacement to the downside. It did here, but the reaction from this daily fair value gap, it's pretty telling. So we'll see if that continues, right? And if we were to get up above this high, what does that create? What does that leave behind? That leaves behind a bullish breaker. And so once it was to get above that, if it does get above there, we could then study how this reaction is going to be and see if it pushes it higher. That would be supportive of this giving another leg lower, possibly filling in the whole fair value gap. Right, if you take this to, again, the 4-hour perspective, right? It's not overwhelmingly screaming to us that it wants to decline aggressively, right? It just simply looks like a retracement. When does that turn off? And we could then reliably from this time frame assume that it's not just a retracement. It's going to be a potential high that turns price to target a little bit more sell side. It's going to have to invalidate this, right? We have a swing low. There's a fair value gap. And then we also have this high to that low, which is a bullish order block, right? So these are our 3 PD arrays that, if they got invalidated, that gives us a reliable process to then be flexible and go the other way and be confident about it instead of just assuming and just kind of throwing it in there because I think this or I think that. No, this would technically be showing you evidence that you could get behind and trust to then look to target things like this or, even, some of these deeper levels down there. Right? So, this is why we're being patient. This is why we're watching. If you look at the S&P, it's absolutely stuck. Really failing to even get up or down, right? It's kind of just hanging around in that level right below these lows, right inside the middle of that consolidation. Look at that. All right, if you took a short, would you be confident? You see the reason why I said I'm not going to take a short? The price action that we've seen has justified my lack of interest to take a short. This is utterly confirmed my intuition behind the fact that I did not want to take a short. Right? Maybe it does end up dropping still though. Even still, with that being the case, if it does happen, this is not something I personally want to engage in. I don't want to sit in a trade and be panicking every 5 seconds. That's not how I do things. And in this type of environment, given all the stuff we've discussed that led me to not wanting to take a trade, all of that stuff keeps me out of moments where that will happen. Obviously, at any moment, you could still be wrong. I'm not perfect. I make mistakes. But for the most part, over the years, I've been able to see characteristics that lead to conditions that I don't want to participate in because of my past engagements and how price behaved before when, certain things are present in price. This is definitely one of them. It's one of those days. And again, going back to what Lucas said earlier, very important element that most people overlook. When there's a lot of news, but there's a big news event later, or if it's like NFP and it's like the day before, or if it's a holiday and we're a day before, or the day of, right? Before it gets to that announcement, before it gets to that event, they're most likely going to manipulate or hold price and not give you the actual move, because time is the most important, right? And then and news is obviously attached to time. Institutional sponsorship is important. You need it in a move that's going to rip towards a higher time frame level, right? Without those things, there's not really much that you can get in there and reliably trust. And then of course, like I said, knowing that this is what happens before a news event like Fed speech or FOMC or NFP or CPI and whatnot, and holidays and quarterly rollovers, knowing that that type of condition is present ahead of those events, again, you have to manage your risk, manage your expectations. While everybody's in here gunslinging because price is moving and they have to take a trade, while they're doing that, wrecking themselves, the wise traders that know what the hell's going on, right? That know, or at least are open to hearing these types of things, they're not going to blow their accounts, And because you guys didn't take a trade, you're able to observe some of these things with a clear mind. Maybe there's a feeling of, I should have taken the short, right? That's reasonable, right? It did play out. I see a justification for this execution. It's outside of my rules, like I said before, because I don't take trades right at 6:30. I don't do it. It's just one of those things that I've learned with experience. From myself personally, it didn't result generally in something I would want to be a participant in. It more often than not put me in position with a trade that may get stopped out, but eventually show that I was correct on where price was going to go. So to avoid that, I just entirely, choose to avoid taking entries or engaging in certain times like this, right? But sometimes, obviously, you're going to miss opportunities. It will offer things sometimes, but more often than not, at least from what I've seen, the rules that I share with you guys protects us more than it makes us miss opportunity. Like this, right? This is a beautiful example of that. I said I'm not interested in forcing a short or pushing a short because of the 4 hour, because of these different factors. And price has gracefully proved to me and all of you guys that was the correct opinion. Because I wouldn't want to sit through this. Even if it does deliver, I don't want to sit through something like this. I want to get in, see price move, at least within the first 20 minutes of me being in the trade. At least show some movement that it wants to be reliable. Otherwise, I'm just not interested. So yeah, let me look at the chat. Right. So yeah, again, if you guys get value from the content, if you've enjoyed it so far, definitely don't forget to like the video, subscribe to the channel if you haven't already. Definitely appreciated. But yeah, we'll continue to monitor how these highs are going to be treated. DXY is unwilling to really do much, right? It's really just kind of hanging around. This is a potential breaker. I mean, you can make the argument that these down candles here may be presented as a breaker. I mean, it did give somewhat of a reaction. If we move up a little bit, let's go see if we can get a little bit more. I think it's, this structure, right? If we were to get above that, be a lot more helpful. Let me see. Lucas said, with this price action, one would no longer be able to think clearly mentally. Lucas, you are absolutely true. I definitely admire the wisdom. Clearly, you have been here for a while in terms of being a trader, or at least at a minimum, you've been exposed to information that is worthy of your time. And so that's something to be proud of, right? So I appreciate your input. And I completely, utterly agree. like beyond a shadow of a doubt. Completely agree. And so, see, these are the kind of traders that I like I like having in this community, because we remind each other of the right things. It's helpful to those that may not be further along, and that's what I want this community to be. I don't want a bunch of signal junkies begging me for an entry, because that doesn't help anybody, and frankly, it's annoying, right? I mean, there's that group of people that that's what they do, and God bless them, but that's just not the vibe that I have here, and that's probably why. It's probably what keeps certain people from being here, because I don't just throw executions at everybody. I want to help you guys progress. I want to help you learn. I want you to be able to, I want you guys to be able to make this something meaningful for your life. And me giving you signals, or you being here to only get signals, or being with anybody else just trying to take their signals, that's not going to get you to the goals and dreams you have for trading. It's going to be very disappointing, but I give signals, right? Like, let's face it, I give signals, especially in my private group, because we're live every day. I always talk about things that, this is where it's going to go. This is where I'm going to enter. This is probably a good opportunity. If I was going to execute, this is what I would consider. Like, that's how I point executions out for the most part. And I let the trader that's listening paint their own decision, right? They borrow some of my perspective, but they're able to do it on their own. And that is such a dramatically better way to learn. Like, for someone that's learning, that's how I was able to learn. I have 3 mentors. Obviously, it all roots in ICT, but I have 2 other ICT traders that I have been mentored by, who have over, one has 11 years experience, the other one has 9 years experience, and they're both full-time traders, right? One's named Joe Miller. He has this community with flashcards, or what it used to be flashcards, but he's a big-time fund manager. Like, he manages like hundreds of millions of dollars, which he shows from time to time. But that's not the most important part. He's a very simplistic ICT trader, and he's a purist, right? He's definitely my favorite. He's the one that got me to focus on the higher time frame the way that I do, right? So yeah, you'll find some of those people in this industry, and sometimes it just takes a different perspective on the same topic that ICT teaches, because we're not all computer coders. We don't all have a super overly complex mindset, and it is what it is. So sometimes the same message talked about in a different tone, in a different way of presentation, sometimes can be the true spark that really gets you, that gets the gears moving. At least that's what I've noticed, and that's what students have told me about, their experience learning through ICT's videos and then coming to me, right? Nothing changes, right? I'm not recreating things like these people that have no integrity on the internet, who are egotistical, but sometimes that's really all it takes. It's a different perspective, a different way of speaking about a certain topic, or just certain things being pointed out, especially because ICT has purposely made things difficult. He's admitted to that. So when you see someone being simplistic with it, it's just like, oh, that there may be something missing. No, he's came out publicly and admitted that he's made it difficult on purpose, or he used to. Things are much more simple now, which everyone should be grateful for. I admire the fact that he's done what he's done, and he's amazing. He's given us all the ability to be individuals in this and not feel like we owe him everything. He's given us a good amount of stuff, right? An amazing amount of stuff. He created these concepts, but he's afforded us the ability to customize our own business. Of course, you know, I mean, it's like this. Like you go to business school at Harvard, they teach you all the different things, right? They give you all the different tools. You don't get out of uh, college and give all the credit after you created a business using some of the tools that they taught you. You don't give them all the credit for your success. They play a small role, right? And then, you get the credit because you put the work. You did all the effort to get even better at the things that you were taught, to take things to the next level. It's the same with trading. Anyone you learn from, ICT or anybody else, if you're in there doing the work, creating your process, dealing with the emotions, learning how to improve, and you get to where you're trying to go, you got to remember that you deserve the credit. You got to be able to accept that. Some people can't, and then they're a student forever trying to learn every concept, and they think that some stuff like that they have already that showed some success is not enough. It is enough. I don't use every single ICT concept. There's a lot of stuff that I don't use because it's unnecessary. But it took me years to figure that out. And only when I spent a certain amount of time digging through a good amount of the stuff, pretty much all of them. I've watched every single video multiple times over the years. But only when I did that and did the work on my own was I able to decide and figure out what was truly important and what truly resonated with me. And then, I got to the point where I don't need anything else. I made this list of 10 different subjects that you have to make sure that you have an understanding of and have a process related to each one of those subjects. And then once you have those 10 processes for each different category, and you understand those subjects clearly, you don't need any more if you have an answer to those things, if you have a process to those things. And that's how I learned and was able to decide, okay, I have enough. I know how to target. I know how to manage risk. I know how to call the market higher or lower. I know how to validate and validate, right? I know the different conditions that make it so I shouldn't consider taking a trade in, like today, right? I know the reasons why, right? I have ways to mitigate my losses. I have all these different things that have a process. I know how to manage my mindset. I've developed processes around that. When I take a loss or a string of losses, what do I have to do to protect myself from myself? What do I do if I'm on a massive win streak so I don't get too high or too low? How do I manage that? What can I put in place that can help me manage that in myself, right? And keep a level head, right? These are all some of the things that we have to have an answer to, And once you have an answer to it, do you really need to be a student forever? Obviously it takes time to figure out all the things that you need, right? Just like how when you start a business, you don't know all the different things you're going to need yet. But as you become more experienced in the business, you figure it out, right? Or if you get help from somebody, right? If they're there to help you, if they're, open enough to give you some of their wisdom, eventually you get the answers you're looking for. And you got to make sure that eventually you decide that I don't have to be a student forever. You're going to be a student of yourself forever. And you're never going to master the market entirely. But you are going to master yourself at some point. That should be your main goal. ICT has said it. A lot of, pretty much every high-level trader says it. There's always something that they're trying to learn about themselves. But once you have a process that works, and if you're listening to my advice, if you look at those 10 subjects I have, which I provide also in the free group, of course, it's kind of like my trader development plan for my students that come to me in the private group. But once you have those things, you got to make sure, don't tinker with it. You only need one setup as a baseline, one framework as a baseline. Every single execution model has continuation variations. So one model is like 15 models because there can be multiple setups on different time frames using the same logic. And then of course one of the most important, aside from risk management, is knowing where price is going, so you don't push something on the wrong side all the time. And hopefully have done a decent job this year helping you guys get that skill set. And I mean, I've shown it publicly, how I'm doing it, what I'm using, how I validate, what I do when it comes to holding onto a narrative and when do I change it. I've done that for months at this point, live, publicly, and so hopefully you guys have been able, or those of you that have been here for a while, hopefully you guys have been able to note those things and take a lot of value from the stuff we've been doing this year. Because the whole point is getting you from confusion to clarity, right? And then you can take the rest of the way. You can take it the rest of the way. You can take it from there, and then of course if you maybe just like to hang out and hear what we got to say, and there's always going to be something to add, right? I can always add to different topics that maybe you're stuck on or is something important to you. That's hopefully I'm able to add to you, because that's the whole point, right? And most importantly, I want to get you from being confused, maybe lacking confidence, to being overall consistent in your process, having clarity, knowing when to trade, all these different things. Those are the main focuses on the channel. And I've got a lot of testimonials that we've been able to do that, at least in a pretty high rate. So hopefully, we can continue to do that, because that's the most important. I'm not here to get famous. I'm not here to do any of the stuff that most of these people are trying to do. I just want to know that I was able to pass the blessing along. That's the only reason I'm live. That's the only reason I have a private group. It's to kind of obviously focus or keep my focus on who seriously wants to make this happen. Because, you guys know the internet. I did stuff for free for a long time, but, people didn't really value it. And this is something that I have a tremendous love for. And I'm not going to sit here with people that don't have at least something like a similar passion for it. It's just something that doesn't sit well with me. And then my students are the reason that I have a private group, right? They encouraged me. They're like, yeah, we see all these people either being, rude or just not valuing it. And then, they helped me with everything that has to do with it, from the setup of the community, how I should organize it, what's reasonable in terms of like price. It's the cheapest out of everybody on social media, and most of these people can't even do half the stuff that I show publicly, which is pretty hilarious. But they charge an arm and a leg for everything. It has to be a barrier to minimize. But of course, students like you guys, it's easy to see who's really serious. And you guys stick around. Those that aren't serious, that want me to give them signals because they're like a drug addict that need a fix, like give me a signal, right? Those people get weeded out very quickly, and then those that stick around, that want the true value, that see that there's value, because there is, they become better as a result. And again, I'm grateful that I'm able to pass the blessing along. I'm grateful that I don't take everything from like the complexities that ICT has. I'm able to kind of simplify it a little bit without taking away from what he teaches or seeming like I'm recreating it, right? Because that's not at all like what people should be doing. But yeah, I'm grateful that you guys spend time with me regularly. Most of you guys that are here today are regularly supporting me, and come and get the value. And each of you guys, I'm sure, have been improving. Pretty much all of you guys I've talked to on a personal basis. Some of you guys are close friends. Most of you, right? And maybe some of you guys that are new, right? Maybe it'll be the same way as well. We'll be close friends, and I can help you improve. Because again, that's the goal, right? So let me see. Lucas said, been watching for a while and have all your videos in Notion plus everything from ICT. Oh, nice. Oh, you're one of them students. That's amazing. I love it, bro. That's why you're wise. That's why you already got the wisdom. It's only going to get better if you keep that mindset, Lucas. So don't lose that fire of being organized, continuously, being very diligent and organized with the things that you're doing. It pays off in the long run. It really does. And a lot of us are closer than we think, right? Especially when we're in the flame, right? In the flame of study, in the battlefield of trying to learn this stuff with the vast amount of information. But little do we know, eventually you're going to simplify. But someone told me this a long time ago. I forgot who it was that I heard it from. But a real testament to someone's mastery in a specific topic is their ability to simplify the topic. Right? If it's overly complex at every turn, right, and things are just constantly seeming like they are absurdly impossible to understand because they're too technical, right? And they can't make it, they can't say it in like normal terms, right, where it's understandable to anybody. That proves to you their lack of experience, right? Their lack of mastery. The things that we do here are absolutely simple. I try my best to keep it as simple as possible. Of course, we can dig deeper on every topic. Everything can go deep, very deep, because the markets are very complex. It's a very deep animal. Okay, like there's so much about it that makes it the market. And same thing with ICT concepts. It's an understanding or a language, basically getting you to understand what the market's thinking, what it's doing, how it's programmed, what it focuses on. And everything's really repetitive, but that's the thing, because it's an algorithm, because there's logic behind it, and it goes very deep. You can take it to crazy levels in terms of precision and explanation, right? But you don't need to be Einstein in the markets to be successful. And eventually you're going to want to simplify it, because if you have too many things, think about this too. If you study some of the people that are really good on YouTube, a very strong commonality behind all of them, no matter who they are, if they trade or like any subject, right? Or not subject, but strategy. If you look at them, especially in the ICT world, the ones that are crushing it the most, the ones that are the most consistent, the most dynamic, they have a simple process, right? A lot of stuff they're not using that we hear ICT talk about. But for the most part, it's simple, right? It's simplified. And we look at it and we think, oh, there has to be more to it. No, there's not more to it. There's just experience and things that they found to be important to them, that make sense with them, that gives them bias, narrative, how to identify it, validation, some of the other things that I described earlier. And they live there, right? They live in that simplistic view, but it took so long for them to get there. Because again, mastery, a testament to mastery is your ability to simplify, right? And not, it's not always going to be ABC type simple, right? But more simple than most people on the internet would like you to believe, right? So that's something that really had an impact on me when I heard, I forgot who said it, but it was in a group I was in, some ICT traders from the charter community, and it was just something that I couldn't understand at the time because I was in the heat of it, right? There's thousands of things I'm trying to learn, and now fast forward up to this point, after it's been a little bit over half a decade, it's a whole lot more meaningful. It became a whole lot more meaningful, and it's going to be the same for you as well. Everyone that eventually arrives, there's a lot of things that we all realize. How we were overcomplicating things, how we need to simplify, right? How we don't need every single concept he teaches to be successful, how we don't have to be perfect to be successful, right? And many, many other things, but you don't have to have all that experience to realize that. You're being told now that that's the way it is, so Maybe that'll help you guys when you're studying, to realize that eventually it's not going to be super complex. There is moving parts because, again, the markets are complex, and you got to make sure you're aware of a lot of things, just so you don't make a bad decision. And even when you're aware of all the stuff that you're required to pay attention to, you'll still make a mistake. And that's okay. For the most part, that doesn't change the fact that simplicity, as cliche as it is, right? Simplicity is absolutely something that has to be considered. And trading every single possible model ICT teaches, that automatically is something that's overly complicating things. So if you haven't focused on one thing, so I have 4 models that I use. It's taken me a year for each of those models for me to master them, at least to the level that I have now, right? I spent a year on each model before I moved on to another one or looked to add another one, right? Some people, it's not going to require that. Some people need, maybe 3 to 6 months, maybe even less, because of all the resources we have to understand certain things, certain models, right? But you want to make sure you have a baseline and then grow from there, right? And try to, when you're learning things like the videos, when you're listening to certain things from me or anybody else, or ICT especially, you want to sit with the concepts and you want to think, how can I try to explain this to myself more simply? What are the key points that he's getting me to trying to get me to understand? And then try to simplify. I have a whole journal of me doing that for myself. And I think that's why I'm able to simplify a lot of the stuff. I had to first do it for myself, right? And then I'm, thankfully able to now do it to others. So I think that's a very big thing that's helped me, and I'm sure I'm not the only one that'll be helpful for. So definitely consider that too. Okay. So yeah, hopefully some of the things we just talked about are helpful to you. We have now basically hit the final macro that I like to participate in. Lucas, you were absolutely correct. I need you to write that in your journal, how you were correct. Anybody else that's journaling too, I want you to take what Lucas said. With the price action we saw and the news that was incoming, the large list of news that we had today, the expectation, once price opened up and showed us what it was, or that it was going to be stuck ahead of the news, they're using that Fed speech to hold price and build liquidity and disrupt sentiment. Okay, and that's a very common thing. So make sure that is the tone for your journal today. Okay, very, very important. PM session is probably going to be better because the Fed speech is in the PM session or in the lunch hour, right? So definitely highlight some of those things that Lucas mentioned today. Because he was absolutely on point, right? And that's, big. They're big parts or reasons why I didn't take a trade at all. And I said I'm not willing to do this or do that. And it's liberating to know that doesn't affect anything, But the why behind why we didn't do anything today is so important, and Lucas hit it right on the nail, pretty much from very early, right? So. Let me see. Will do. So it was once again difficult not to do anything, but that was the right thing to do. Absolutely. I like the honesty. I like the honesty. Absolutely. This is one of the hardest things to know when not to trade, right? Today was one of those days to not trade. One thing also you can add to, when we come off of a previous day that was a large range day, the next AM session, one of ICT's rules is to expect the next AM session after a large range day to be the way we've just seen. That can be a point on top of what you mentioned earlier in the session that kind of added to the fact that this was low probability. Aside from the fact that there was a huge crack in correlation, okay, so that's another thing. So those things together told us today that this was going to be a low probability environment, right? Or there was an expectation of it being low probability. Was there an opportunity to execute? There was here if you don't have the same rule that I have, right? Which is I don't take a trade when we're so close to the open. If that's not a rule that you operate within, maybe it's different for you, right? That this is just my rule, my experience, the way that I do things. But if I didn't have that rule, obviously I would have been open to taking something like this, to short into the fair value gap down here. And then even if it was to turn around, who cares, right? Price dug into the 4 hour. That's something you could do, trading to a level. And then when price goes away from a level, you could trade both ways if you understand order flow, right? But you have your main objective, which is, in this case, it was the buy side delivery, because that's what the higher time frame shows, right? And, that may change eventually. We're not there yet. We're not quite there yet, right? But that may eventually turn into something that tops. We'll see. We're not going to assume that. We're going to observe this the rest of the day and see what transpires going into the rest of the week, right? But yeah, these things that I've just laid out, that Lucas has been pointing out, vitally important things to put in your journal. Vitally, right? And again, don't forget, after a large range day, large ranges lead to small ranges. Specifically, if you want to get more precise with it, after a large range day, a previous large range day, when we're going into the next day, and it also has a big news event in PM session, or even if it doesn't have a news event in the PM session, but more so if it has a news event in the PM session, the next AM session after a large range day should be expected as low probability, right? Because large ranges lead to small ranges, okay? And then small ranges lead to large ranges, right? So yeah, these are very important things. Like I said, make sure you guys note those things. Very important. And you take this stuff over the next couple months, couple years, and you're going to see that, wow, that stuff is very helpful when I'm anticipating when not to trade, when the AM session is going to be a shit show, right? And the AM session is where I specialize. I could trade other sessions. I started in London. I traded PM session for a while, but I like to be in the market, get what I need, get out. I'm not trading to be trading 24 hours a day, right? That doesn't mean you don't study and whatnot, but when it comes to engagement, your business plan should have business hours. And I would prefer my business have small hours, because that's the life of a trader, right? And there's specific times in the day that are dynamic. And for us, at least for me, I focus on the AM session, right? We understand all of them, but the AM session is my baby. So when you decide where you're trying to stick, when you decide where you're trying to live time-wise with trading, you want to make sure that you learn all about it. And what I've just discussed the last 5-10 minutes, that's part of the characteristics of the AM session. After a large range day, going into the next day, especially if there's a news event later in the day in the PM session, or if there's not a news in the PM session, after a large range day, the AM session should be expected to be a little bit slow. Why? Why is that logic something that could be reliable, or is reliable? Because when there's a large range that happens, what is everybody going to do? They're going to think they're missing out. They're going to think that, they missed things. So they're going to want to try to do what? Chase price. So it's more likely that price is either going to stall out for the AM session or completely reverse against them into something like that 4-hour fair value gap we were watching. And then once it spends some time in there, in that perspective, doing that type of delivery, then maybe in the PM session it will open up. I wouldn't be surprised if the PM session opens up and fully commits to blowing these highs out. After it just opposed the large range from yesterday, digging into a discount array, very logical discount array, simple retracement, to then go higher, right? And the timing element is very important, like I said. And this is what I've just discussed about large ranges going into the next day, leading to PM session or AM session being a bit harder to trade, or seeing a reversal entirely, and then the PM session continues. That scenario is absolutely repetitive. It happens so often. I've seen it literally for the last like 4.5 years. In my 6 years of trading. Right. So yeah. So take note of the things that we've talked about today. Very important stuff. It's not stuff that everybody focuses on because most people don't know what the fuck they're talking about. Excuse my language. But it's very annoying when people don't know and they're trying to act like they do. And I don't want people to get hurt. So that's why I'm honest. That's why I'm transparent. And that's why I'm not always here to tell you what you want to hear. I'm not always going to be blowing smoke up your ass like ICT says. It's just, and you shouldn't want that. You shouldn't want me to be that way or anybody else, because it does you no justice at all. It does nothing for you except feed a bad perspective that can't be profitable. And that's not why we're here, right? We're here to become successful, become effective as a trader, and understand the game that we're playing, so that we can go out and help others or just help our own families thrive. And that's achieved by doing things the right way and having the right perspective, and being professional, being a professional in this industry and not a gambler. Right? So yeah, with that being said, again, thank you guys for the patience. Thank you for sticking with me this long. It's much appreciated. Thank you to those of you that have liked the video. If you haven't already subscribed to the channel, definitely do that. If you feel that you have any trader friends or anyone that you think can benefit from these types of conversations, we have them all the time, or benefit just from the technicals that we do, or just enjoy being around a positive community that knows what's going on, that proves they know what's going on, and it's filled with a lot of people that are very successful in what it is that they do, from either me or students that have become successful. Definitely invite them to the family. The door is always open, and that's much appreciated for those of you that do that, that have done that. I'm very grateful for it. So yeah, with that being said, I guess we'll put a ribbon on it. AM session, like I said, has been it's been a little bit chaotic, very indecisive, consolidation, time distortion ahead of the Fed speech, like Lucas said, very wisely. Review some of the comments that Lucas said. It's very wise things that was mentioned down there. So definitely go check that stuff out. Again, hopefully you guys got value from what it is that we talked about today, from the technicals to the mindset and everything in between. And we'll be live again here on YouTube on Sunday. I may potentially do something tomorrow. Depends. I'll have to make a decision on that. But if not, obviously we'll be active in the Discord. My private group students, we always go live, so I'll see you guys tomorrow. Yeah, we'll also be back on Sunday as always, as it will always be, right? We'll always be back on Sundays, and see if we can, do some more effective things to start this fourth quarter. One more thing too, it's the end of the month. So like I've always said, the start of the month, the first week and the last week, start of the week of the first week of the month, generally that can be consolidation manipulation for the monthly power of 3. The second and third week are generally the most dynamic in a month, because that's the expansion in the monthly power of 3. The last week, which I believe, it's pretty much where we're at right now, the last week of the month can generally be the cap, or something that goes against what the current month did, right? So something to keep in mind about the conditions, so you're aware, similar to what we talked about today. We talked about a lot of conditional awareness scenarios, different things that led to what we've seen, and how we need to start thinking about these things, and how we can use this information in the future to know when to trade, when not to trade, and how to manage our risk properly when those environments arise. Okay? So yeah, again, hopefully you guys got value. God bless each and every one of you. Thank you guys for hopping on and supporting the channel. Don't forget to like the video, subscribe to the channel if you haven't already, and I will catch you guys on the next one. Don't do anything reckless. Let's watch how things play out, and we'll be back again tomorrow. All right, have a good day, you guys.